Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This is a Forex quick look at the dollar versus yen as we enter into the new trading week. Not a lot of activity in this currency pair, but some key technical levels that I think you and I can lean against in the new trading week. I know I sound like a broken record in this currency pair, but the 145 level was the swing high here. It was a swing high here. We had verbal intervention by the Bank of Japan here. And then on this day right here, this was a Bank of Japan day. They kept rates unchanged. Meanwhile, the U.S. Federal Reserve was raising the rates by 75 basis points. So it was hard to ignore the move to the upside here in the dollar, the selling of the yen. But then the Bank of Japan came in and forced the price all the way to the downside here. And since that time, the price has been building to the upside. We closed last Friday right here. So a week ago, we were talking about, hey, what needs to happen to get this pair either higher or lower? And this 100 and 200 hour moving average was going to be the barometer for either more bullish or more bearish. And as you can see on Monday's trade, the market started to base against the moving averages and move to the upside. However, the trading range for the week was fairly narrow in between here, at least relatively, I should say, and the price also continued to find resistance against the 145 level on the top side. That the high price for the week came in at 144.897. That was on Tuesday's trade, and then on Wednesday, Wednesday, we found early sellers against that level, against the 145 level. On Thursday, we found early sellers against the prior date highs and against the 145 level. And again on Friday, although we tried to move higher late in the session, we still remained below the high for the week and the 145-ish type level on the top side. That is the level for the Bank of Japan to get worried about the weakness of the yen, the strength of the US dollar. So we go into the new trading range with that ceiling against the 145 level on the downside. We're going to be watching closely the 100-hour moving average. That's also near the low end of some swing areas right here. It's kind of getting a little bit messy through here with the lots of up and down through that level. So, but nevertheless, the 100-hour moving average is there. And the other level that we're going to be watching is the 200-hour moving average. Recall, again, in fact, last Friday and this Monday, the market sort of based against that level and moved higher. So it's inching to the upside. It's currently at 144, even a nice little round number. If we move below that, that should increase the bearish bias to the downside for trading purposes for this currency pair. Of course, the dollar versus yen fundamentally still says go higher, but we also know fundamentally, if you call it intervention fundamentally, or fundamentals, that there is that ceiling and risk that the Bank of Japan can come in at any time and push the market to the downside and cause big losses like we saw right here for a lot of traders. So those are the technicals that are driving this currency pair going into the new trading week. I would look for the breaks and look for the levels to lean against perhaps, and then if we get below the 200-hour moving average, then things kind of open up for the downside for that currency pair. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.